Hello, everyone. Very epic music. We're trying to figure out what our mood is like. But yes, this is Stop Losing, Start Trading, the tri weekly trading show that we're doing here at the Panoptic team to discuss options, discuss trades. How can options benefit your portfolio? How can you harvest yield using fancy options trades? Nothing we say here is financial advice, of course, but this is just for entertainment. What we say and discuss openly, sometimes the intern listens to us, sometimes not. And then we manage their trades, which is surprisingly going pretty well despite the market turbulence that we've seen. I'm here with Rosalie, aka the Crypto Queen. How are you doing today, Rosalie?
Good, good. I'm doing well. I'm wearing my grandma's pearls for good luck, and market seems to be going a little bit
Yay.
up. So,
You want to open a new trade or just more generally something needs help of your grandma today?
yes, a new trade needs help from my grandma.
Okay. All right. And like in options, there's so many things sometimes to do, and it's hard to know. And this is kind of what the goal is to discuss how again me and Rosalie think about the market and think about what trades could be. We can jump into the markets. It's been going up a little bit. You mentioned this earlier, yeah, Rosalie, but price is not always down. Sometimes it bounces. This is the last 24 hours on ETH. I'd say this is kind of green over the week, which is great. We've seen so many down days. The craziness of the terror stocks has definitely subsided, but yeah, still pretty high IV. Um, Over the month, I don't want to zoom back out too much, but it's still down. But overall, we've seen this play over and over again, where a big drop and then there's a stable price, drop stable. Maybe we're in this new kind of support zone, but ETH has been doing kind of okay. Bitcoin as well is up close to 85,000. You know about, yeah, XRP is one of your bad, but yeah, it's fine. We any other coins that's on your mind this week or that you've seen in the news or
No, just always looking at Solana, XRP, Chainlink, and some silly meme coins here and there. But
I don't know yet. Doge, I guess the highest market cap meme coin. I would be actually. I'm tempted to look at this is the price, but then if you look in BTC term, I think it's going to be. Yeah, it's very very coupled to Bitcoin. Oh, it's been doing better and outperforming ETH a little bit, but yes, Doge Bitcoin is are very much integrated. It's actually pretty interesting.
I did just buy some fart coin as well. I got to keep my eye on that. Make sure I don't forget to sell.
You buy this on like an exchange, or it's on Solana, right? Or how do you
Yeah,
buy
I just swapped it in my Phantom wallet.
it? Who knows? You don't bet against something that people do every day. Who knows? Definitely on the coming up. Why fart coin? Like who? I've seen tweets every once in a while, but yeah, what prompted you to buy fart coin?
My friend added me to like a traders chat and they were like, buy Firecracker. And I was like, okay. But I think, yeah, I recently kind of learned more about how it was created and that it's, an AI.
Breath of fresh air.
Well, it's a lot cooler than you might think. I think they got like Chat GPT and Claude to talk to each other
Oh,
and
remember
to
this?
come
Yes.
up with this code. And I was like, wow, this is actually more than just like a silly meme. And so I thought, why
It
not?
may have some yes depth into it. Unfortunately, it's in the Solana ecosystem. Maybe we'll go there at some point, but we cannot trade it on Panoptic. But we can certainly look at the intern's portfolio. If you remember earlier this week, we're down, I think, $75 or $80. We are down only $11. ETHUSDC was our biggest kind of loser in a way. Now it's recovered, but we have positions in BTC ETH, ticker Bitcoin ETH, ETHUSDC, and also ETH Eigen. Let me swatch. We can switch to a cash base, but most of them are doing making a bit of money because again, we're harvesting yield. Little loss on USDC, but the goal is to diversify your investments into multiple assets. Everything is correlated, but if you have kind of multiple smaller deployment, I mean, capital deployed in smaller pools, you can capitalize on wins and losses, and it's never wipe you out. The bulk of our investment are still is still in ETHUSDC, but we have BTC Tiger Bitcoin and Eigen that are doing pretty well. Anyone in particular you want to start to look at first? And yeah,
Yeah, let's start with the BTC ETH. I know that was recent, so.
yeah, there's been a slight, not revamp, but tightening of the columns here. But we do have the net liquidation value and the P&L in a single row here, meaning this is how much your portfolio is worth and how much you're making in terms of money. So it's still pretty flat. Here we have the marginal balance between how much still you have in terms of Bitcoin, but also how much you utilize here. 40% buying power utilization is kind of okay. You don't want to go above 50%, even though it's still one position. You don't want to overextend. But yeah, this is one position. Yeah, if you hover as well, we show what it is. But one strangle in the monthly 0.18. Let's have a look. Um, a few changes on the UI, but yeah, this is the first one that we typically look at. But yeah, uh, this looks good to me, but yeah, any comment on that position?
No, yeah, it looks pretty good. Doesn't look like anybody's bought any of our liquidity yet, so we're just currently earning normal fees, but price seems to be exactly
Oh,
back to
exactly.
where it was.
Started.
Yeah.
And so we did a research bite yesterday, and it turns out that buying puts, which is what you do for being bearish, outperformed selling calls a little bit over the past year. And I thought about it for a little bit, and I think the reason is definitely because buying puts or buying options is kind of cheap now. We buy on realized volatility, and if there's a lot of liquidity sold, you can get cheap puts, pay less than the expected. So that's why I think it overperformed. Normally, it should be the reverse, where selling options is always more risk but slightly more reward. But yes, the environment that we're in now means that buyers put or calls are getting a slight edge. That doesn't mean that you lose automatically if you're selling, but you're kind of uh, you're better positioned buying options on Panoptic because it's based on realized volatility, which is repressed, than on Deribit, for instance, which is based on IV, which is a bit higher. But yeah, maybe there's a call to action if you want to take the reverse of this, or maybe buy one of the two legs, getting upside exposure, downside protection. You could buy this and be maybe getting a slightly better return profile because it's cheap to buy it.
Interesting. Yeah, maybe I should start buying some puts too.
Yeah, exactly. So the we maybe do we wanted intern to do it, they did not do it, but maybe we'll buy an option as well for hedging purposes, because now again, the more we, this is all of us learning, but if I use my pure TradFi experience, buying options is typically extremely well priced. You pay a premium for that protection. But because Panoptic is still emerging, there are inefficiencies, and this is one of them where you can buy puts cheaply and then be kind of getting the edge, which is normally on the sell side. Maybe so, but yeah. So one thing that this is also a slightly like preview, but on the market info, we had a look last week, earlier this week, and let's cover this. But we this is the P&L of the position that we just saw. Here we can actually include the deposits, which is now showing, because we have some ETH and USDC deposited, what is your net portfolio that includes deposits. So here in that case, even though we're bearish, including the deposits, because we own some ETH, it's kind of neutral to bullish, which is fine. But this is kind of one thing to keep in mind. You have some deposits. Another one that is now in the works but will be published is that we have a risk analysis tab now. Right? This one, it's actually one of the neatest one, but this is when you get liquidated in that position. We're selling options. There's a risk of liquidations. Maybe we'll try to zoom in a little bit, but this is the risk profile, where in green, this shows you your collateral balance. Since we have ETH and BTC, it's going to change in price. And in red is your required, your collateral requirement. So we do see that when the two lines cross, these are your liquidation prices. And now we're dead smack in the middle of this straddle. Unless it moves quite a bit, we won't get liquidated, but there's a risk for liquidation. So I know that you've been playing around a little bit with this, but yes, this is a new way, new figure, new chart. When you have this, what's your what's your take there? Oh, Brandon.
Um, yeah, I think this looks great. it's important to kind of know what range you're safe in, right? And so you want to know what the price is when that you need to be like have your notifications on for. Although since this is the ratio, these
Yeah,
numbers look a bit confusing to me personally.
exactly. So I was also doing some math, but current price is 0.0118. Actually, the zeros also, it's always confusing. So if you go, and this is all sneak peek, if you go to advanced mode here in the gear, you have the ability to flip the markets. And what is now 0.019 BTC? Let me flip this. It's going to be how much ETH you have per Bitcoin. So it's not how much Bitcoin you get per ETH, but now how much ETH you have per Bitcoin. So now 53 ETH per Bitcoin. So price of ETH is 1600, price of Bitcoin is 80K. This is kind of the 50 here. And now we have different numbers as well. Now it's at 50, and we get liquid if the price goes to 122 or goes to 17. And again, in sense of scale, it's like 2.5x increase will make you liquidatable if the ratio now keeps going down. If the ratio recovers, it's also going to be about 3x lower. So we're, even though it seems like we could be liquidated, if it goes 3x the current price on the upside or 3x on the downside is when this happens. So 3x does happen, but it should not be worrisome, because indeed 3x on the ratio may take a while to realize it's, who knows, maybe a Bitcoin hack means it goes to zero and then you get liquidated, or a ETH as well hack, but that is still somewhat comfortable, meaning that you can shoulder a 60-70% drop and not be
Yeah,
liquidated.
yeah. No, this doesn't look like anything you need to worry about. By then, we'll already have closed this position.
Yeah, and hopefully yes. And then you never know, but this is kind of one way to prevent risk. This is risk analysis, will show maybe the sliding risk as well, how much you lose. This is just a collateral requirement, but there's a few things that we can add to this. But yes, risk, I'm very proud of this. We now show, and personally I would need it for my own position, but we now show where you get liquidated. And even though you get liquidated, the losses are scaled by the distance between these two. So even if you're
Mm,
barely into it, you may not lose much. The real loss where you lose everything is likely like another factor of two down. So
I see.
anyway, this is a cool view for ETH USDC, ETH BTC. I'm sorry. Which one? Which other one do you want to look at next?
I would like to try to manage the ETH positions
Yeah.
next, if we could. Yeah.
Okay, so this one, there's two positions. Um, one of so the overview. One of them is open 7 days ago. The other one 4 days. So I would not expect us to manage it on their own, because they're earning premium. The spread is above one, which is great. Both deltas are kind of not zero or one, meaning that we're still in range. So that position, we win without looking at each one. We know it's in range, it's earning premium. This two are bearish, meaning that you make money if the price goes down. Price went up, so it's normal that we lose. So as a per position, I don't say this, it's worth looking at it, because we can see a lot from the overview. But for the whole portfolio, this is where we can go back to that portfolio view and maybe look at the liquidation prices. But uh, one, what I do personally as well is that I may have one, two, three, multiple positions. I look at the P&L again, including deposits. This is kind of delta neutral because it's kind of flat-ish. But yes, I would say that the being in range versus being kind of in that flat zone is what you want to see. So in terms of management, there's not much more to do, and this is one of those situations where we may add a new position to balance that portfolio, change the risk profile. Here there might be more risk on the downside than upside, and maybe let's look at the risks tab, and this is another one. Yeah, okay, so this is now maybe whole numbers, but current price is 1500. And yeah, if we were to look at this, the does it worry you, what's the liquidation price that you see there?
5,000.
Yes. So
So no, I'm not worried.
if the price of ETH goes to 6K, so remember, we were bearish, and being wrong means that the price goes up. So if we're wrong directionally and it does jump out to 6K, new all-time high, and we don't catch it in time, we start getting liquidated. I'm also not worried.
I would also be super excited if that happened. I mean, you can, take the losses for this option at that point, but my wallets will be happy.
Yeah, and I think that that's also the fact that it's so far away because you're making money on the way up because you have some deposits. You have 1.3 ETH that captures and increases in the value. So even though it seems that this is a naked call, somewhat a lot of risk on the downside, if we go to 6K, oh yeah, we're off the chart here. But the loss at 6,000 would be normally two full ETH, which may seem scary, but because we have the deposit inside, we go from 2 ETH of losses if it's just a position to zero point 0.6, which is again about a third is less, but it's two-thirds less, but a third of the amount, but also much less worrisome, and then we would have time to manage. So this is good. We discussed this a little bit last time with intern not listening to us, but what would you one? This is a good point to say. What new trade should we do? The current portfolio is neutral to slightly bearish. Do you still hold that assumption, or are you mostly full bearish, full bullish? What is your new assumption on the price of ETH over the next month?
I think that, yeah, it'll stay between this new kind of lower range, I believe. But I also feel like this weekend might be more of a bullish time. I would assume something to happen to push it more bearish later again. But I'm feeling quite good about the market at the moment in the short term.
Okay, so we could try something which is if the price were to jump up, we see the delta here, but oh no, yeah, I did it wrong last time, but yeah, the delta is currently zero point 0.8, negative zero point 0.8, I guess, meaning that if we go from the price here, go way up, we would be exposed as if we're short zero point 0.6 ETH. If we're bearish short term, we can try to neutralize these deltas, and the one at 2000 is zero point 0.8, but higher is zero point 0.6. But again, what I'm getting at is that we can neutralize that delta in the upside by buying a call option or maybe selling some puts. But let's try to create a trade that would make this delta go from zero point 0.8 to maybe zero point 0.2. So maybe like a quarter less exposure on the upside by buying a call option. So get a number that we want to optimize is the delta at, and maybe is 2K a price target if you say you're bullish. What's your price target over the next 2 week a week?
No less than 2K, but
1800.
yeah, yeah.
Okay, so we still look at the price target. This one is 1800. The delta is still zero point 0.8, so zero point 0.8 ETH of exposure. If the price did go there, we would lose money. So maybe you want to straighten this out, and let's have something that adds about zero point 0.6 delta of ETH around the 1800 by, let's say, buying a call option, because again, I'm getting familiar with buying options a bit more. So let's go from that page to the trade page. Let's see what liquidity rate there is and what type of trade can we do. But yeah, the one thing we want to keep in mind is to add zero point 0.6. So let's try to do 1 ETH bullish, maybe buying a call option. We can see the liquidity. Ooh, okay. So a lot of what we see is that, and it's true since we launched, but there is a lot of calls queue, meaning that all of these call options are purchased, or at least they have some missing liquidity, meaning purchase, except for this one. So this one, 1800 call, seems pretty good. It is not too overbought, or at least there's not much liquidity that's missing. If we were to add zero point 0.6 delta at this strike, this is this strike here is 0.27. If we want to add zero point 0.6, maybe we need to add 1.5 ETH. So 1.5 times 0.3 is about yeah, 0.5, 0.6. This would add a lot of positive deltas the more it goes up, and it would neutralize definitely the strike. We paid 13% more. This is kind of this Vigod here, which I think is okay, but yeah, it's okay. This is a different trade. We haven't done any of those, but if we were to just look at the chart here, Rosalie, do you see something? wrong or risk, or what is your kind of take on the having that type of payoff? Just to give.
Yeah, I think it it looks okay. We have limited risk and unlimited upside, although it looks like the upside really kind of just starts at what I believe to be like a more um not realistic price.
Okay. So again, buying options is a different. We can have this thing here also be present. Now we have a lot more deltas if it's at the money. So there's one strike here, which is, well, this one is another one that we could buy into. And then if we say one ETH, so again, buying options is always about trade off. You have to think about the fact that you're paying as you go, which changes the math a little bit. So we may be selling options here and there, but we will be paying. And this is one upside that exists. We add some deltas. The one that I want to compare it to is setting a put option, which is this other bullish trade.
I just have a quick question
Yes,
for the vagoid that we were seeing there.
yes,
This option is cheaper, correct, than the other one?
yes, exactly.
Yeah.
There is a little bit more liquidity. I mean, if you like the height of the bars, there's a little bit more liquidity in this, so that if you buy one ETH here versus one ETH here, it's very similar. I did reduce the size actually because it's at the money. Um, I mean, I would say that if intern wants to play it a bit safe, try out and dabble into buying options, they could buy half an ETH of the at the money strike. This is the most kind of active you can be. It would add a bunch of deltas if it goes up. If it goes down, they would be paying, but then not much more impacting the price. Not the price, but the risk, because if it does go down, you just are limited. And yeah, maybe I think that might be what we discussed last time. But let's try this out. A little bit of hedging in terms of tapping into a short-term upside, getting to a strike which is pretty liquid at the money, but also not too expensive. And yeah, let's try this out. And let me try to paste the links that the intern can also click on that link, and people listening as well, and do exactly the same trade that we've been doing. And let me paste this in uh, the YouTube channel. Do we have YouTube listeners? Yes, there's a few people. I just pasted the link on YouTube for that. There we go. You can type this yourself or try to do it. So I think this is a good point to start. But yeah, let's try out this new way of capitalizing on the fact that buying options is giving you a tiny edge currently. 10%, 11% more than the fees is still somewhat manageable. I would say that it is a bit less risk, but then we will maybe paying. And if it doesn't work, then we'll reconsider. But yeah, that might be one that we can see on Friday how it panned out, and maybe next week as well.
Yeah, sounds good.
All right. So again, I think the eigen and the other markets, the eigen and the
Take
ticker
it.
Bitcoin work okay in terms of P&L too. Both of them have, yeah, the ticker Bitcoin has a delta of 0.06, so they are right in the middle. We just collect Tether, which is the fees is fine. This is also two options that we've created in ticker in eigen. Both not making money, so I don't think there's not much more to do. But yes, I think the new trade that we'll do is a ETH USDC one, buying a call option, which is not something we've done often, but that can help us kind of capitalize on maybe some other tweet, some other event. Who knows? And the worst that can happen is that we pay some fees that don't pan out, or the best is that we have some upside. So
Yeah, sounds good. Hopefully the market feels as good and lucky as I do.
yeah, and then also just to be sure, we try to look at the whole portfolio, get the risk profile, and kind of adjust the risk, and not necessarily say I'm going to go 10x, 100x. Oh my God, I'm going to make money. But now it's just kind of, we were exposed on the upside. We now have some way to mitigate this. So that's kind of the idea.
All about
Cool.
the deltas.
There's one, and then since we're here, there's one question about this one. Let's have a look. So yeah, this is a gold USDC. This is could be a trade that you can replicate in your brokerage firm. and or kind of your trading account. The tokenization means that now we can trade it on Ethereum as well. Could be open 24/7. I'm not sure if there's a market that's been created, but we can certainly have a look at the. Yeah, there we go. So again, I will share my screen for a little bit. Um, we can monitor Uniswap position. So someone did launch a Pax Gold USDC pool on mainnet. We have the price here. It's actually interestingly deployed. I think because there is a real market to hedge with, LPs may probably take a bit more risk, and then they can actually be a bit more active. But yeah, no one has deposited. But if you own a bunch of USDC yourself or a bunch of Pax Gold, sell covered calls, maybe sell short puts. But this is a cool. Maybe we'll look into it. Thanks, yeah, Darren, for the tip. But that uh, yeah, same here. Uh, you can actually trade. Oh, Ridley's gone. There we go. We feature here. We can actually trade this gold market now on Panoptic because it's tradable on Uniswap. It has some healthy amount of TVL, definitely 3 million healthy fees, $3,000 worth of paid fees. It has a reasonable amount, like $100,000 at the current tech, which is pretty good. So maybe myself actually. I'll maybe transferring some funds there. But this is a new and cool market. Thanks, Darren, for highlighting it because yeah,
Yeah, the liquidity looks well distributed.
I did
That's
trade
all.
some of the Bitcoin USDC, and it also went pretty well in terms of like choppy price action, very kind of uh, interesting. Yeah, so a very cool market because there's now maybe more stability because of the ETFs. Gold, of course, has a lot more stability, so you can be pretty sure that the movement here and the price move would be pretty organic. Yeah. Thanks, Darren. But yeah, maybe I'll double into the gold markets too, and segueing this into next half of the show, which is the options hour with Brendan, where we comment. Maybe we'll talk about gold, but yeah, this is another one of those cool market that we can only trade on Panoptic, perpetual options on gold. Um, but yeah, all right,
Awesome. Thank you.
I'll
Yeah, we'll check back in on
I'll send
Friday.
you to the back room. But yeah, all right, thanks, Rosalie.
Sweet. Another comment here from Darren.
That's right. So yeah, metrics. I assume you can look at who are these LPs in the gold uh, pool? How do they manage this? That funky liquidity distribution, I'm sure, has like some sophistication to it. So yeah, it's like selling options again. Selling options is a service that you provide. Almost, you are taking a lot of risk. You make it liquid for the investors, liquid for the traders. You get paid by the fees, but it's a if you're either the only one or you're sophisticated, you can actually get a lot of upside, a lot of alpha there. But yeah, I'm sure these LPs could do a lot more trades on Panoptic. But yeah, the fact that there's liquidity already means that anyone that trades on the Panoptic market has a lot of liquidity backing it because of the other LPs.
Lots of options to sell against. We haven't done too many commodity options, but maybe.
I mean, do you think this is my personal view that RWAs are the entry point to the institutional trading? I guess. Yeah. Well, how do you feel about? I think commodities will be traded on chain, but yeah, how do you feel about
Yeah,
that?
I mean, it'll definitely be a big booster. But yeah, we'll see what type of, because we already have gold here, so we need to see that grow. But
I don't know what corn futures, but yes, any could be oil, could be gold, could be different currencies. Like the advantages are definitely will make it inevitable for like those that trade this.
do we have many perps markets? I wonder if anyone here knows. But yeah, for this gold market.
I would not be surprised if perp platforms and perp traders are only focused on meme coins launches and not as much on the commodity ones. You use futures for a reason, and this is why it's so useful in TradFi. But yeah, the perps and futures for meme coins may be more on the speculative side as opposed to risk management. Yeah, I don't know.
Yeah, and I don't know how many people know this, but Guillaume, you used to be as a grow up on a dairy farm. Was that right? So
There we go.
you guys,
Corn futures. As
yeah,
small anecdote.
say
When I
again.
grew up, when I grew up, I was growing up in the 80s and 90s, we had no ability to grow corn. I'm from Canada. It was cold. It was short growing season, freezing, early frost would kill any corn. So it was like you had to travel south, like, I don't know, 100 miles to actually be able to grow corn. But now, warming up, there's actually a growing season that allows corn to be grown where I'm from, which is near Quebec City. And like a third, my brother took the farm, of course, the older one, but the corn growing I guess area has expanded to now my brother, like a third of the crop he grows is corn, and it grows pretty well. Like the my father now is in, I mean, 70s, but he's like, no way, he's every year is like, oh my god, perfect year. If you had this in the 70s, they would have made like so much more like yield in terms of the crops. Not just like no corn, but like hay and everything. Like he would like plant like soybean and stuff. But yeah, corn futures. A lot of farmers, they want to lock in on the price. They want to actually have the ability to say, I'm going to sell that corn at this. This is basically a covered call, but call option on that price. You lock it in. You can still get some upside eventually if you don't want to sell that. You can close that call and get the asset. So that's why it's so used. But yeah,
Is this something like smaller family farms will do as well, or mostly just the big
no,
industry?
yeah, we did meet with people from Indiana that were doing like industrial farming, and it was still a family business, about three brothers type of thing that would like grow only corn for like other people, but they were big into it. So I would say that the small farmers may not see that much of it. And I think the trading or hedging fiber is a lot more established in the US than in Canada and maybe the rest of the world. But yes, they were using futures and options in a way that, again, you might not think about it, but it's good for business. You need this. You need actually to be to weather the weather. You have to be able to reduce volatility in your crop yield. One of them is to kind of have options be what you trade instead of just the crops themselves.
Very cool. Yeah, that's sweet. We got another comment here. On Arbitrum, there are tons of real world assets, RWAs. So yeah, I guess there's going to be some perp markets there. Interesting enough, you can trade. Probably the layer twos, right? We'll see this more.
I don't know. I mean, L1, there was a tweet that I retweeted and commented, but yeah, if you want to make assets or any RWAs, you want to have the certainty and the security of validated networks. Maybe you do it on L1s and then do the trading on layer twos. But yeah, I think there's always going to be a place for L1 DeFi protocols, L1 hedging. Yeah, something like that.
All right. Well, you are correct that we'll be talking about the gold markets today a little bit. Gold is up. We are at an all-time high with gold. So looks like at least gold futures, they're at 33.44, up over 3% today.
I mean, it's very close to the Pax Gold one.
Yes, it's
Oh my god.
glad the markets are working on.
Actually, now I'm doing something. I'm on Discord, and maybe that's because we're live streaming. But there's a bunch of spammers and posting now. I've been banning like 5 people. Sorry about not paying attention, but yeah, the health Discord is definitely something we have to keep in mind. Oh my god.
Are they
Trade.
asking saying anything about gold or?
No, they say like go in this Discord for like tech support and stuff.
Oh, okay. Yeah, don't listen to them. There's a lot of impersonators called brands in
Yeah.
there.
Anyways.
But no, so this week, gold is way up on the week. I think we're up like, was it 10%, double digits, something like that.
Which is massive for gold, yeah.
Or at least on the month, yeah, we're up double digits. Treasury yields are down, so I'll share my screen here. Kind of a flight to safety with gold, but treasuries are not seeing this same flight. Instead, if you look, let's zoom out a little bit on the week, we did see, or even on the month here, we did see a big decline with leading up to Liberation Day, and then we saw Trump announce across the board tariffs in the double digits across pretty much every country. And then when people got yippee. The rumors, people called up Trump, some influential people saying this will destroy our market. And so Trump paused the tariffs for 90 days. We see the yields go back up.
I mean, I
And
thought the
then,
goal was to repress yields by doing these shenanigans, so that you could refinance
yeah.
and stuff. That's like the what the I thought the price of the bonds was going down, which implied a higher yield. But yeah, can
Oh, yeah. Well,
you
these
show
are,
the daily, like something that's a little bit more granular?
yeah, let's zoom in here.
Yeah, this one.
How about this?
Yeah, I mean the bond markets are so weird, but there's trillions of dollars traded, and that's why maybe Trump listened to the traders, because they didn't bite, I guess, and didn't believe any of his. So whether it's people dumping or other countries kind of exiting the U.S. Treasury, that means that the yield now are increasing. But yeah,
Yeah, I mean, here we see the yields decreasing, though. I do think Trump wants the Fed to lower the interest rates. I think,
yes,
does he want the US dollar to be cheap comparatively so we get more imports, I believe, lower the trade deficit?
I don't know.
But
But yeah, I think the spike, what scared him off is that no one bit. It actually went much higher in terms of yield, 4.6%, 4.6%, which is kind of entered the goal of what he thought was going to happen. So that's why he came, I'd say. Yeah.
But yeah, so we are seeing gold massively successful. Bitcoin, on the other hand, has been a little bit of a yield, a hedge today. So we are up on Bitcoin while a lot of the market is down. Specifically, Nvidia dragging down some of the market. There was an after hours last night. Nvidia fell like 7 or 8%, another massive drop when it came out that they needed to have an export license for certain chips to China. So a lot of tensions, uncertainty, and frictions between trade between U.S. and China, causing this big drop in Nvidia. But we are seeing a little bit of a flight to safety in Bitcoin, a little bit, but mostly in gold.
Yeah, that's right. The I mean, in our case, so how is it up today? Like, yeah, 1.3% is massive. If you think about gold, it's like underperforming when you think about volatile assets like Bitcoin. But yeah, I'd
Yeah,
say that
that's Bitcoin, but yeah, gold being up 3% is massive.
yes, definitely.
Beautiful chart. Peter Schiff was right, I guess, for this year. Once every 7
Go
years.
trade Pax Gold. Yeah, no, you could get exposure to this. No, that's right. Maybe that's going to be. Yeah, we should meet with the Pax Gold team, but that could be one of those incentives, because yeah, I think the the way that you could trade this would be selling puts, buying calls, getting kind of upside, some leverage in a way that is extremely decentralized. But yeah, very, very cool.
Sweet. Well, we'll move over to measuring the performance of uh, this indirect gauge of Trump's presidency. Let's say we have the Trump USD price chart. Um, Perhaps the peak was inauguration date. Here we have it loading, but we are at an all-time low
I
here at
mean,
trading under $8. Looking at the market cap, we started at a high of around 13 billion. That's not fully diluted, but just the unlocked amount, and we're down to just over 1.5 billion. This comes in the face of a massive unlock coming. So, kind of cool site here, tokenomist.ai. They show you upcoming events for unlocks, and you see that right now only 20% of the supply is unlocked. And we have this event coming up in 2 days on
so
April
this was
8th.
a 3 month. Yeah, the what I know, what I see is that the teams typically do a 1 year lockup, and then after that, it's so this was maybe a 3 months or 4 months.
Yeah,
Three
let's
months.
see, from
Yeah,
January 18th to April. Yeah, 3 months. It looks like there's
a huge another
another
20%. Or yeah, how much? Yeah, another
yes,
extra. Okay.
another 20% will be unlocked, and it will be, yeah, it's here
Yeah,
20.
how do people trade this? And I'm sure this is part of the way you push in your trades, but what can you do? Like, can you short this? I mean, yeah, I'm sure you can short the Trump perps
Yeah,
are
I
in.
mean, so this is a Solana market. I think we've got quite a few perps markets on Solana, so I'm sure there's probably got to be some healthy perps market. And how much of this is being baked in? We already know this unlock's coming. The question really is the unlock is going to the Trump team, that 20%, I believe. And so the team behind the token that launched it, are they confident in this project? Will they continue? Will they liquidate for treasury funds? What do they even need to run this project? I don't know if they're operating expenses. What are they doing? So there's a lot of uncertainty and doubt of whether or not the Trump team will keep their unlock there. And so we've already seen the price is already at an all-time low. Sorry, that's the market cap. But yeah, we're heading straight into that. So that's something to keep an eye on. You can't trade options on that, unfortunately, but that would be great to see, to be able to trade the volatility, because honestly, the price could go either way, in my opinion.
Yeah, no, again, I think it's also an AMM. There's liquidity provision. That's right. Maybe they should LP with these funds and have a different income source. But yeah, I mean that's. I don't think the Trump meme coin is bound for the moon because still a meme coin. It's still like they have different ways to monetize. But yeah, uh, interesting. Yeah, that's right. I didn't know. So token metric is the one that shows the upcoming unlocks.
Oh, sorry, this site tokenomist.
Tokenomics. Okay,
AI.
interesting.
Yeah, so let's move to a question that we got from a Twitter user. This was on a recent research bite. So we have a research segment every Tuesday, and Amy was just on that with Beyond the Greeks, talking about some of the Greeks here, specifically the Greek delta of an option. And she was exploring how selling different bearish strategies, so selling calls or buying puts, would perform. And we had a question here about the markets and options trading. So this question is 40 delta short calls too risky in this volatile market as crypto? So yeah, question here about 40 delta short calls. How does this compare to perps? Is this too risky of a strategy? Would you recommend avoiding or changing your delta here with this selling
Yeah,
call?
exactly. So I think the delta, we've seen it a little bit with Rosely. It's a measure of probability of profit, or maybe the probability that you're kind of in the money or you're right in your direction. So if you have a 40 delta call, it means you have a 40% chance of being wrong and a 60% chance of being right. And that means it's a little bit kind of below. So you have kind of a 60% right, which is fine. If you're right in the middle, it's 50-50 almost always. It's 50 delta. So I kind of agree with this. Normally, 40 delta, 50 delta, you can even go in the money. This is for strong conviction. If you are kind of on the sell side, especially, you might want to go to 30 delta, 25 delta, getting a higher pop, meaning probability of profit of, again, 65, 70%, 75% is easier to manage and easier to kind of shoulder if there's any market move than 40% or more of delta. So the delta is one entry point parameter. The other one is kind of what's the IV. There's many things that can go into it, but yes, 40 delta is for slightly more aggressive plays. I'd say it's not as aggressive as at the money, but it's slightly more aggressive than say a 30 or 25 delta. Something we'll probably explore, like the entry point interval delta. How does that impact? But yeah, in the chart, if you try to create a 40 delta call, or maybe this was buying a call, which was bearish. Yeah, can you switch this to a call?
Oh yes, buying a call.
No, yes, selling a call.
Oh, selling call. Sorry. Yes, here we go.
Yeah, so the 40 delta is priced above the current price. If we look at the monthly, it's about, I don't know, 5-10% above, which is fine. But if we were to do a 25 delta, it would be a little bit more to the right, a little bit more out of the money. It would create some buffer zone to collect fees, and that's kind of a slightly safer play. It's all about trade-offs. You make less, but you have less risk. If it's 50 delta in the money, you have maybe more risk, maybe you make more. So yeah, the bullish assumption is still holding true, or the bearish assumption is still holding true. It's just uh, if you're wrong, how much can you survive, type of thing. And the higher delta, the less forgiving it is. But yeah, so it's all about trade-off. We'll definitely do more research pieces on different deltas, different entry points. 40 delta is just kind of maybe uh, a one data point that is easy to compare both. I guess it's also easier to buy at the money a little bit and out of the money. So yeah.
Sweet. Yes, thanks for that breakdown. Very helpful answering that question. So, yeah, if you guys have questions, please drop them in the chat. We're live on YouTube and X. We do this every week. So let's go to just a quick market roundup to end the options hour of the current options market. So we're looking here, we're looking at DVOL. So this is the Dare Bit Volatility Index, kind of like a VIX for Bitcoin and a VIX for ETH, just aggregating different different contracts and kind of compiling the implied volatility over time. And so here we're showing the spot price of Bitcoin and ETH in the darker blue color versus the implied volatility from the Deribit index in red. So we're currently at about 50 on Bitcoin and about 70 on ETH. I think you can kind of interpret that as like 50% IV annualized, if I'm not mistaken. So a little bit of a mean reversion here. I think we saw a lot of volatility going in to Liberation Day and immediately after, but we're kind of back down to the lows that we were seeing a couple weeks ago now. Any comments on the implied vol right now? Oh, I think you're muted. Sorry.
Yeah, the Volmex index also shows a similar story, which is kind of it's reacting to the market, but I'd say it's still staying elevated, which is kind of not means that we're not out of the woods yet. Sometimes you have a spike that subsides very quickly. We see this even in equities now. It's came down. It came in a lot quicker than what we see in ETH, for instance. Again, with today, we'll see. But yeah, so I'd say it's just the chaos means that no one is fully again the IV to, in my opinion, is a reflection of the pulling out of liquidity, not selling, not buying, but just less liquidity that makes it more volatile. So if it stays up and it stays up for a while, it just means people are just waiting on the sidelines, not trading as much, not kind of allowing these larger trades. So that has an impact on the price itself, but to some extent, it's just kind of staying elevated, not coming back, meaning oh yes, the tweet reverted the order, but people are still kind of maybe scared a little bit. That's why it hasn't. The price might have kind of rebounded, but the volatility and liquidity is not kind of back to where it was.
Mhm.
But yeah, so it's just kind of a measure of fear, but more closely, like and concretely, is just measure of how much liquidity is still in the system. And I mean, you have like the COVID crash. It was like 80-90% IV on S&P 500, and it's just people were trading, but then liquidity wasn't there to meet it. Same amount of trading, even more trading on normal day would be fine, but then higher trading, less liquidity means that yes, the IV kind of goes through the roof.
Yeah, is that? I mean, do you think those S&P options markets though are driven mostly by a few large market makers, and if so, then were they just kind of being safe, like let's not sell
I
these
mean,
options?
no, it's a very dog eat dog. There's multiple market makers. They don't need a license. They can do whatever they want. And you may be worried that say if you're the only one there, other people will pick you up. Like other the five other market makers can now kind of screw you over. So yes, I would say that the alpha and the sentiment does go into the market makers decision to trade or not, but it's mostly like everyone was so scared again COVID, but even now everyone may be so scared to market make at scales, and if they want to go back, maybe other market makers can kind of pick them off. So I would say that it's no one is doing something because like they can be afraid, but then they don't want to lose money first and foremost. That's kind of the the only reason why
It's their
maybe liquidity
job,
hasn't gone
right?
back. Yeah, exactly.
to make money during the fear. So we'll look at one more chart here with the on unusualwells.com. So we have the realized versus implied volatility just to see the actual. So the implied is kind of what the market is thinking, right? And then the realized is what ends up going on. That's why this realized chart cuts off a little bit earlier, because we can still get the market priced volatility, and we see that we had some for a lot of the year we had a good variance risk premium. So the variance risk premium is when the IV trades basically above the RV. We can see that here as well. The purple, it's positive, it's above zero here, and then we see this crossover around, when is this? Shortly after inauguration. So we see the volatility going up a lot more, and certainty actually happening in yellow, and then the options being a little bit underpriced, it looks like. And so the VRP purple goes down starting around February 6 and going into the negative territory. We've kind of been hanging around there. We spiked up a little bit, but mostly this is, of course, a month old because we don't have the realized volatility data there yet as it's trailing, but we have been kind of staying in the negative territory. So you've been trading options though this month, over the last month that we don't have data for. Has the VRP been positive for you? Has the intern been making money selling options, like, or is that just due to the intern's unique skills? What's
Yeah, so I think the this is IBIT, this is BTC USDC. It has a bunch of liquidity, and these market makers now kind of they sniff the opportunities and they go in there. And yes, I would say that the variance metric, or at least the realized versus implied, is one of the ways that you should know, okay, this is a good time to trade or not. I would be interested to see, like, around that faded liberation day, like how much higher the realized was, and then how much, like, even though the IV may increase, it's still going to be kind of could be outpaced by realized. But yeah, so it's not just kind of IV is higher, you make money, and then IV is lower, you lose money. It's actually a bit more complex than that. I think Brandon has dropped off, but at the end of the day, I think the being consistent and looking at the IV rank, which is IV related to itself, is a better predictor. Um, the IV is still one thing that is the what's guiding maybe trading entry point or not. But at the end of the day, the risk premium or the IV could still be exposed to realized moves. The deltas is not just it could be kind of where you may start neutral and be directional. Long story short, I did sell a delta neutral strategy in IBIT myself. I think maybe 3 weeks ago ish, thinking that the IV would be crushed and collapse, but then the opposite happened. So I'm still managing it, and I'm looking at it. I'm still right in the middle of the range. I had to move and tighten the range a little bit. I was 40 to 60 in the IBIT price, which is $40 to $60, and it was probably like 2 weeks ago, 45 days from expiring. Now
what is the
I'm
price at now?
now the price is 48. I'm between 44 and 51. So I start 40 60. I'm 44.51. So the price did go up. I moved nice strikes. It's like rebalancing an LP position when you trade a strangle in the underlying. So time has moved. I started, I think, 16 delta strangles. Now I might be I'm actually 25 and 30 delta. So I'm higher delta, but because IV has expanded and I'm also close to the price. But yeah, I'd say that it's fine. Again, the way you manage a strangle or the way you manage an LP position is not very dissimilar. So you just have to kind of rebalance. Impermanent loss has in its name that I should maybe wait for the loss to reverse, to revert. When you trade options, you have to be a bit more proactive. You have to manage. You have to kind of not let it go, because if you let it go for too long, then it could add a bunch of risk. This could be an outside risk factor in your portfolio. So always be managing. And then this is something that definitely I do on Panoptic because it's easy. But yeah, I was doing also on Uniswap a little bit as well.
Does it make a difference that there's an actual expiry on these IBIT options for you? Like when you know that you have 40 days or something ticking, does that change how you think about like how urgent you need to manage it? Whereas an LP position, you could say, oh, maybe I'll come back in a year from now, or
no. I think the expiry that you traded with options, If you're trading zero DTEs, then you have to be on top of it the whole day because it's expiring. What I personally do and what I would do in Uniswap and Panoptic is that you try to do a monthly type of option, an option that is expiring far enough in the future that day-to-day moves don't impact you as much, and it can move 5%. And if you're wide enough in Uniswap or wide enough on Panoptic or wide enough in your kind of ETF trade, then that 5% move means you're in range, but you have slightly more risk. If you're dealing with weekly options or zero DTEs, this is when even if you manage, you get killed in the first downward move. So what I do is that I set it up so that it's a month and a half in advance, manage it until it's maybe 2 or 3 weeks from expiring, and I get out because I don't have the stomach for the risk and the gamma. That would be in the Panoptic or Uniswap world. Your range is fixed, so that's fine. But you can imagine that it's a range that narrows down
Yeah.
in TradFi. And then if you're out of range, the more longer you wait, the more out of range you are. So
Mhm.
that's when you have to balance. And if you start wide and rebalance wide, it's kind of similar to what you do where you have a 40-day for expiry. After 30 days, you can still rebalance and not be exposed too much.
Okay. So it does.
All right, I think Brendan is also frozen. But yeah, I think again, trading options in TradFi and selling options is actually very, very similar to LPing, providing liquidity in Uniswap. A lot of what I'm doing now in Panoptic is driven by my own kind of experience with TradFi options. So you guys can start with trading perpetual options right away, and that would be kind of your way to get into the way to trade options. So you have a leg up because you don't have to worry about and learn about options too much because you know about LPing. So that's kind of the idea. I think again we're almost on the hour, so I think Brendan may be back here. I see him, and then let's get rid of Brendan's
Yes,
clone.
there's a couple of them.
Yeah.
But yes, no, this was great. Great options hour. Again, nothing we say here is financial advice. Please do your own research. But we have some interesting things coming up. Keep watch of the unlock on the Trump coin. Let's see what happens with the macros going forward with the yields. But stay tuned for another episode. I think we won't have an episode till next
Oh, that's true. Yeah,
Wednesday, I
that's
believe.
right.
Is
So
that
we I think the markets are closed as well. I think on Easter-ish Friday, so we'll see. But yeah, maybe we'll skip and then we'll come back next week. But yeah, stop losing, continue
right?
trading,
Stay tuned for
regardless
another
of
options
what
hour
the
then.
market does. But yeah, very, very cool. Thanks, everyone, and then I'll see you next week.
All right.